Hi, welcome to the Market Alert for Wednesday, the 26th of February 2025. So US stocks were pressed and T notes were bid following disappointing consumer confidence data. And US stocks were slumped after weak consumer confidence data. I think there was a bit more than that was going on yesterday. Bonds were bid and Nvidia earnings ahead this week as well. Economic news today, we've got new home sales from the US and crude oil inventories, and of course we continue on with the G20 meetings as well. Right, let's have a look at the markets for yesterday and kick off with the Dow. So in the Dow, the market trading down to the 50% retracement there. You can see market just trading below that. Huge volume, oversold. Market's ready to head back to the all-time highs. Now we've had a few days of profit taking and the market pulling back. It's been a good pullback over the last few days for the Dow. Let's just have a quick sort of ballpark number from this high down to yesterday's low. You can see there that 1,500 points is a decent pullback in the Dow there. So I say prices are free to move back to the upside now. So let me just remove these lines here, and let's go to this recent high to here, so you can see the targets on the upside there. That's what you're looking for as resistance as the market moves up, so keep an eye on those. Let's have a look at the DAX. In the German DAX, the pullback isn't that much. If we have a look from there down to then, yesterday's low wasn't really taken out, it was tested. We've got just 849. We've had a 15,000 point rise in this since COVID, which isn't so bad over 15 months. So in the German DAX, the market didn't really take out the lows yesterday, certainly not the low of last week, or is this Monday? Let's just have a quick look, 21st. And then, Friday, this is Friday's low there where we saw the demand coming into the market. And then on Monday and Tuesday as well, you've also got prices moving back to the upside despite the sell-offs. A bit of volatility around at the moment though for the DAX. There's the all-time high. I can just get it to activate, and you'll see that we're sitting at 22,936. So market free to head back to this level. We've got no other economic news or major economic news this week. As you can see, yesterday it was a bit volatile to start off with. Market down. You can see them buying back in with the green. They then move the market up, and then you can see the selling there coming in with the two purple bars. That's supply coming into the market. Price is down. You see them buying back in and then bringing the market back to the upside. And we've just taken out yesterday's high. So the DAX still very, very strong compared to the US markets at the moment. Speaking of US markets, the S&P obviously down yesterday, but they brought back into this. You can see it at that level. No problem there, and starting to make its way back. Again, I'd be inclined to draw in some fib retracements and see how well the market copes if it moves back to the upside with these levels, and also take note of the levels that have got averages at them as well, because that can offer a bit of resistance as well. In the 30 minutes, you can see yesterday it's the cash market again in the afternoon. Markets held in the morning. We've got climatic volume down here, and then prices moving to the upside there. In the FT100, also finding support yesterday, despite Starmer's military spending. Said forget everything else, we've got more important things coming. I'd like to know what he knows that we're not seeing, because he's all of a sudden become afraid of Putin, which is weird, very, very strange. I don't know what's going on. And there you can see the market up yesterday, down with the cash market, and then overnight taking out yesterday's high as well. So very strong for the FT100 overnight as well. And speaking of being strong in the US dollar, we can see this is also up on the overnight as well. It was down yesterday, and yet they monkey hammered their metals. So again, complete disconnect from reality with these two. That is the US dollar and the metal. So let's have a look at those. So as I said yesterday, they didn't finish with silver on the downside. They probably still haven't either if they can get away with it. You'll see prices there sitting at the 89% retracement yesterday, and the low of this bar here from a few weeks ago. In the 30-minute chart, there's they started early, didn't they? They brought it back a bit, they allowed it, and then they just hammered it lower. It is the end of the month, but this, interestingly, February isn't a delivery month for physical silver as a rule, but there's over 4,000 contracts of traders wanting to take physical silver. So that begs the question of, as Bitcoin fades, gold sees huge ETFs, inflows, silver sentiment soars. And you're probably thinking, well, how on earth can that happen when you're seeing this go on? Well, this is about shaking people out, getting rid of people, and then when the market's ready to move, they haven't got any resistance to move to the upside. However, it is silver, and the banks are still massively short, so anything could happen at these levels. The 3150 is the important level. That's the blue line there. But if you want to see a good video about silver price and what's coming, take a look at this video. Yes, have a look at this video by Gold Core. As you can see, the headline there, it says silver is a major breakout coming. And what's really fascinating about this is what I've been talking about in the market alert for the last few years is the gold silver ratio, because we're approaching a multi-year high, which normally where silver gets to, the market then turns around, and the gold silver ratio moves lower and the price of silver moves higher. So this is the monthly chart so that we can see exactly what's going on there, and that's the 91 area which we're actually trading at the moment. But it's this level here where they may just slam the price just a bit more, just to move down to that 95, 96 area. But you can see in the monthly chart, when you get to these levels, you then start to see, you can see 110 there, but you start to see the gold silver ratio drop and the price of silver move higher. Of course, this was, I mentioned it many times before, but if you're new here, when we had the COVID virus, it was just a gift from the gods. We went up to a record high of 126 pieces of silver to 1 ounce of gold. It was incredible. And then the market moved south. And during this time as well, I did actually buy £5,000 worth of ETFs, and that turned into a 5 times trade. And it was done through an ISA as well, so it was all tax-free. So the gold-silver ratio is very important to watch and see there. So I'm looking at this 96 level as some sort of floor for the price of silver if they continue to hammer it. It's starting to look a bit weakish again now, isn't it, overnight? So don't be surprised if they give this a good hammering again today. And also gold there, you can see we just haven't quite got to that $3,000 an ounce. And to be honest with you, if they want to do this now and actually try and shake out, because they're determined to get it through $3,000 and then hold it above, then that's even better. I'd rather they do that now, and instead of slamming the price at $3,000 an ounce. So again, you can see the slam there yesterday, LBMA, and then bringing the market back, but it's struggling a bit there, but certainly stronger than silver based upon the gold silver ratio. And if we just go back to the daily chart, you'll be able to see where we're currently at, and you can see yesterday's move to the upside as well. It's last 3 days just been absolutely shocking for what they've done with the price of silver, but you get used to it and you become immune to it, because you can actually see what it is they're actually up to. Right, let's have a look at yesterday's trades. And starting off in the morning, there was a lot of volume in the pre-market, which you can see there. There was already a lot of interest. Market opened and off we went back to the upside. Huge volumes in this market for yesterday. Starts to drop off a bit. We have a potential sell signal there that's filled, but we've got to have another rally to the upside, which we do. And then the market starts to move to the downside, as you can see there. And then as I'm watching this market, we're short on this trade, and you can watch the volume, and the volume spikes up, and you think, I'm out of here, I'm not staying in this. They've just bought back in, and sure enough they did, and then they moved the market to the upside, and then eventually they start to take profits on the upside too as the volume increases again. And then we drifted through into the afternoon. Again, you can see the Dow is on stream there. They're starting to buy back in. Unfortunately, this didn't help because the market then started to sell off, and you can see the selling coming into the market in the red bars, and prices moving lower. They move lower until we see some big buying come in, and you can see down to the DP, and then look at this bar here, down at the DP, huge volume, one of the largest bars for the last half an hour or so, and it's at the BRN and the DP, and even as it goes through the DP, you see the increase in volume, and there again, bit of profit taking there, but then the market continues to move to the upside. This is classic, when all the headlines are reporting everything falling apart. This is just classic stuff where they use this as an excuse, move the market down, and then buy back in, and that gives you the bottom in the market. So if we're to have a quick look at what's going on at the moment, you will see that prices have already traded above yesterday's high, maintain that momentum, and let's just put some volume on there. There you go, you can see that bar there as it went through, then it disappeared. It's a case of let's suck in the weak traders overnight, and then we'll just dump it on them. So there's actually selling inside of that bar as prices are moved higher. You can see coming off the closing off the high, so we can see there that there is some selling. But bigger picture for today, we can see that we're already at the high, and we've got the R2, R1 on that side, and then we've got the DP down to the low. But I think as far as the selling's concerned, and looking at the daily chart, that's over for the DAX for the time being. Like I say, there's no major economic news items. Market's free to move back to the upside there. Okay, that's it for this one. Let's see what happens during today. And as ever, thanks for watching. See you in the next one.